The text messaging part of Grower's Edge is very handy because every day I'll receive a text that shows me where the best local market is.
That's what I like about Grower's Edge too. It gives me the information I want on my smartphone so that if I'm not in the office, I still get the information that I need.
Good afternoon, welcome to GrainTV. My name is Cody. Today is the 5th here. It's a Thursday. We had export sales out early this morning. But before we get into those, let's turn over to the Grain Hedge trading platform and see where we closed off the day. Corn trading up 1 1/4 cents, soybeans up 8 3/4 cents, and wheat in Chicago, the leader to the upside. Boy, we haven't seen that in quite some time, closing up 15.5 cents here on the day. Let's talk a little bit about export sales here because that was really one of the main pieces of news that came out today. Corn, we came out with export sales of 844,000 metric tons. As you can see here, that was on the lower side of analyst expectations. That was a drop week over week of about 12%. So that was a little bit disappointing, but you know, overall, it really wasn't that bad. We'll talk a little bit about where we were in terms of meeting USDA forecasts here in just a bit. But soybeans coming in right around 489,000 metric tons. That was on the high side of analyst expectations. Analysts were expecting between 200 and 500,000 metric tons. This was the largest weekly drop in terms of a percentage. Soybeans dropped, export sales dropped about 35% week over week. So this is another situation where it was a drop from last week, but keep in mind that soybeans are, these sales were running well ahead of pace. I mean, we booked about 93% of export sales there anticipated by the USDA. We're well ahead of pace to meet USDA expectations, and it seems as though we continue to get export sales. So despite the fact that we did see a decline from last week's export sales, which were well above analyst expectations, I would say that soybeans here, the export sales were enough to provide some support and some bids here under soybeans in today's price action. Wheat came out here with 397,000 metric tons. That's right within analyst expectations. It was a decline of about 27% week over week. But the bottom line here is wheat sales are going to need to be outperforming. We've seen such a huge decline here in wheat production. Unfortunately, we've seen such a decline in wheat prices. Unfortunately, we haven't seen a pickup in export sales, but there was positive news here. We did get Egypt announcing that they may utilize a $100 million line of credit here from the U.S., and they may be announcing U.S.-only tenders here. So very well, a very distinct possibility that we could see some Egypt gas tenders for U.S. origin wheat. That would be very positive, and I think when you look at today's price action, you can see that wheat really benefited from that news. Let's talk a little bit about that U.S. export sales and where we are in terms of meeting expectations. The nice thing about this chart is what it does, it shows you weekly export sales. So each one of these red bars represents where we were or where we are in terms of meeting USDA expectations. And you can see that we finally crossed over that green line, which is what we saw in the 14-15 USDA projection. So that's seasonally, that is the line that takes into account seasonal sales that we would expect to see. That's the pace we would expect to see to meet USDA expectations. So we've obviously passed that pace. We've booked a cumulative 32.1 million metric tons. This time last year we only had, we had 33.2. So we are a little behind last year's pace, but we're well ahead of the pace expected to meet USDA expectations. And then take a look at U.S. soybean exports. You can see well ahead of where we were last year, well ahead of expectations in terms of meeting USDA overall projections. It's just, and we continue to get sales. So if we don't start seeing cancellations here, this could be a very supportive story here for soybeans. So of course the market is looking for cancellations as we see China start to kind of switch their buying program to South America. If we don't get those sort of cancellations and we continue to see export sales roll in here and be very positive, we could have a situation kind of like last year where we keep getting supportive news for export sales, and that could very easily support soybeans. But all in all, you look at soybean prices, you look at corn prices, and I am concerned that South American crops are coming out of the field down there. That's going to put some pressure on. Of course, the last few days we've been able to kind of hang in there after that big move on Tuesday. But all in all, I would still say I think my opinion on corn is sideways to slightly lower here in the coming months. My opinion on soybeans is likely that we continue to trend lower here. Wheat, we've had a nice snapback here. It's going to be interesting to see if we get these gas tenders, but we're probably seeing a short covering rally. That may extend a little bit longer than some expect, but in the end, we're going to need to see stronger export sales. We just haven't seen that here yet for wheat. Thanks a lot for tuning in. If you have any questions about what I was talking about here today or what that means to your marketing strategy, give me a call. The number is 877-472-4607, and if you haven't done so yet, take a demo of our platform. See what it's like to hold live quotes in your hand, be able to maneuver through the markets, be able to navigate the markets when you're away from your office, when you're out in the field, and when you're just when you're in town. So go ahead and do that. You can take a demo at the 14-day free trial. That's the top right-hand corner of our website. You can take a 14-day, no obligation trial and just see what it's like to have access to that trading platform. Thanks a lot for tuning in. We'll see you here tomorrow.